Few industrial companies have been as consistently terrific in their execution as the company we're going to hear from next, PPG. Here's a company that saw the writing on the wall. Get out of commodity businesses, move it to the food chain, all the way up to proprietary parts of the chain, and prosper no matter what kind of economy you get. That's why PPG is the leader in the chemical industry. Total dominance in the coatings markets, highly value added. PPG has also been an incredibly shrewd deployer of its bountiful capital. Earlier this month, PPG closed on its purchase of Comex, the Mexican paint maker, for $2.3 billion, in a deal that's set to be immediately accretive, to the company's earnings in a big fashion, while also giving PPG, which is already a big player in emerging markets, much more exposure to Latin America. It's been a terrific buyer of its own stock, serially increasing its dividends. Now, this stock got hit. It got hit badly during the worldwide slowdown fears in September and early October. Then PPG reported on October 16th, the company delivered some very strong results across the board, which is part of the reason why the stock's come roaring back ever since, to the point where it's now only a few bucks from its all-time high. And to think that this $208 stock traded just $176 a month ago during the height of the sell-off. While PPG is only a few bucks up since we last spoke to the CEO back in July, it's given us a phenomenal 418% gain with reinvested dividends since I first got behind it in 2009. So let's check in with the incredibly bankable Chuck Bunch, who is the chairman and CEO of PPG, find out more about how his company's doing and where it's headed. Mr. Bunch, welcome back to Mad Money.
Jim, it's great to be back with you.
All right, Chuck, I've got to tell you, a lot of exciting things here. But to me, this closing on the Comex deal is gigantic. You've got some outline of how much synergies there are, how much can be taken out. What is your feeling about what this deal could do if you get all the synergies right?
Well, Jim, as we spoke earlier, this deal is immediately accretive. This is the second largest acquisition in PPG's history. We're acquiring Comex, the number one coatings company in Mexico, the leader in architectural coatings. We have good synergies. They have a great distribution and supply chain. We should be able to move PPG products in areas like light industrial coatings and protective coatings into the market. And we are already the leader in automotive OEM and large industrial customers. So we think it's a great fit for us, good synergies, and we're going to start seeing the results in here, our first quarter of operations.
All right, one of the things I was fooling around with their website. I mean, is it possible that they have a technological edge on other companies? Optic play, rare sensibility, human nature. I'm talking about some of the versions of paint they have. Can they actually help PPG's core paints in the United States?
I think eventually they will be able to help us in other areas in emerging markets, as an example. And I think there's some things to learn from them. They have a great supply chain. They're more back integrated than we are. And they have products that I would call fit for use in developing markets like Mexico that we participate in around the world. So we're going to be able to take advantage of some opportunities with their products as well.
All right, let's talk about raw costs. Now, in a recent conversation we had with your IR, with Vince Morales, he's talking about, people want to relate lower oil prices necessarily to some of our products, but the best way, perhaps, is to relate gasoline prices to distribution. That's got to help you. You've got stores all over the country. You're sending paint. Your bills are going down in terms of getting the paint from the factory to the store.
Yes, it usually takes a while on these lower commodity prices for it to move through our supply chain. But obviously, the most immediate benefit is in distribution costs. So with all the trucking and movement of product in this market, or even in markets like Mexico, where Comex has 3,800 stores, we're going to see those benefits sooner. And I think then it will work its way through the rest of the chemical value chain on the petrochemical side, especially here in the U.S. market. So we should start seeing those benefits over the next few quarters. Commodity prices have been quite benign in terms of inflationary pressure, but we should get some help earlier on the distribution side on gasoline and diesel prices.
Chuck, a lot of people are worried about emerging markets here, but you've made a real big bet on Mexico. What are you feeling about Mexico that you're willing to put so much money toward it?
We are very confident in Mexico, especially for the long term. But we've been very successful there in the automotive OEM and industrial markets. The country is really rapidly industrializing. It's participating in this NAFTA opportunity. A lot of new automotive manufacturing facilities are going up or have been announced in Mexico. So a lot of growth there. The government is liberalizing economic policies in Mexico. It has a young and growing population. So we're very optimistic about the opportunities in Mexico, both for the near term and the longer term.
One last quick question. You generate so much cash flow. Next thing, buy back more stock or still in the hunt for acquisitions?
Well, we're going to do both, Jim. We're still in the market here in the fourth quarter for our own stock. We have a strong balance sheet even after deploying a little over $2 billion for Comex. But we think there are other opportunities for acquisitions. We have an active pipeline, probably not something quite as big as Comex. And we've made a couple of smaller bolt-on deals here earlier this year in North America. And we think we have some good discussions going on. So over the next year, we're looking to deploy another $1 billion in terms of acquisitions and share buybacks. So we're quite active on both fronts, Jim.
Well, your stock's going to blow right through its all-time high. Chuck Bunch, Chairman and CEO of PPG. Thank you so much, sir, for coming on the show.
Thank you, Jim.
All right, this company reminds me of Big Ben the way he was playing last night. I think PPG is truly the best way to play industrial renaissance in North America right now. Stay with that. Stay with Cramer.